Hello everyone and welcome to our Instagram live event. My name is Paul Arsov and I'm the founder of the Decentralized Web project. The topic of today is predictions for 2023 in crypto, bear or bull. First, I have to apologize that I'm with 1 hour late. So I didn't set up a clock. It's Sunday and I had to wake up earlier, but I did overslept and I'm starting the event with 1 hour late. Sorry. So if you came to the event at the setup time, which is 1 hour earlier than currently right now, I apologize again, but you can check either the recording or you can come to this event right now. So let's go first with saying a few words about our project. As I mentioned, I'm the founder of the Decentralized Web project. We're building a decentralized communication and advertising platform. When people are talking about decentralization, when people are talking about Web3 or Web5, they think that it relates with blockchain technology. But I believe that blockchain technology is not suitable to be the driver of decentralization. Why is that? In my educational talks, I did repeatedly mention about the disadvantages and the flaws of blockchain technology, what makes it not suitable to be the driver of decentralization. Very briefly, basically the blockchain technology continuously is adding blocks. It becomes very large in size. It's not possible for a person to carry a node for a blockchain, and it makes it very cumbersome, very burdensome, and so there are also limited number of transactions which can be submitted. Like there are new types of blockchains which claim very large number of transactions, but these transactions, they mention the count of these transactions. They one little detail is they're already submitted to the blockchain. So like if they're already submitted, it's very easy to handle a large number of transactions. But the the submission of a transaction actually takes time, and the time depends on the speed of the light. So if a specific blockchain claims a very large number of transactions, they somehow found something which is faster than the speed of the light. And we know that it's not physically possible because it's a law of nature currently, and all the transactions have to comply with the speed of the light. Let's say about a large number of transactions and the requirement for consensus, like blockchain technology, is starting explicitly with distrust, and so every node of the blockchain, it has to verify the transactions submitted from the other nodes, and these requirements to have a consensus, to have an agreement between the different nodes when transactions are submitted, and all the nodes have to agree on all of the transactions submitted so that they can form a block. This requirement for consensus or agreement takes time, and so this also limits the number of transactions in the blockchain. But enough talking about the flaws of the blockchain. Um, so what we're building is still has a blockchain instance and a cryptocurrency token, but it's our own blockchain instance and cryptocurrency token, and it plays just a support role. Decentralization is achieved by an engine which does decentralized communication from user to user. In addition to having users in our blockchain, in our decentralization implementation, we have network nodes and bridges, which are non-stop devices. For example, user, they can use the like decentralization, communication part-time, and then they turn off or they close the lid of their computing device, and they do not participate in decentralization anymore. So they're on and off participants. But there is a second type of participant, network node or bridge, which the user, they can install at their home network connection, and this node or a bridge, it becomes part of a large decentralized network of nodes or bridges. So this is as I said, there are two types of major participants in our implementation of decentralization. The first type of participant is user. The second type of participant is network node or a bridge. Success project depends on marketing, and we have been posting on social networks. And the list of the social networks is very, very long. It includes Instagram, Facebook, Twitter, Telegram, TikTok, LinkedIn, Pinterest, Reddit, and Discord. So this is a very, very long list of social networks, but we're focusing on Telegram, we're focusing on Twitter and Instagram. Basically, we're aiming to build a community to attract users to come to our platform and become users of our decentralized network decentralization implementation. To make it interesting for the users of our community, for the participants who come to our community, we are organizing educational events like this, and these educational events, they happen on Saturdays every week on Twitter Space, and on Sundays, just like today, on Instagram Live, and usually they happen around 9 o'clock Pacific time, which is 12 o'clock 12 o'clock noon time Eastern time, and that's about 6 p.m. 6 p.m. in the afternoon or evening West African time, or 5 p.m. UK time, and it's about 7 p.m. Eastern European time. So this is the timing, but let's mention about the events themselves. We started these educational events about 3 months or a little more than 3 months ago, and our very first event was on the topic of what is blockchain. Our second event, which happened on both Twitter Space and Instagram Live, was on the topic of what is a smart contract. Some of the topics of the following events that we did are like applying astrology into crypto trading, decentralized finance destined to implode, um, big crashes in 2022 in crypto, um, predictions. So actually, 2022 in crypto, what did happen in 2022? Decentralization engines, blockchains as decentralization engines, and how other decentralization implementations. But let's mention an additional event or events which are happening regularly every week. Let's mention the events which happened every Thursday. And every Thursday we have either Ask Me Anything event, or we have also a demo day event. So one Thursday every week we have Ask Me Anything. The following Thursday we have demo day event, and the following week we have Ask Me Anything event again, and then a demo day event again. Actually, in our project, we have a lot to show. So we have a graphical screen, and we have specific options, and we have different platforms which our decentralization software engine installs. So you're welcome to come to our Ask Me Anything events and our demo day events. But enough talking about our project. Let's come back to the topic of today. And the topic of today is predictions for 2023 in crypto, bear or bull. For the people who came yesterday, I did talk about this topic for about 1 hour, and I'm going to go briefly over, briefly repeat what I did talk yesterday, but then I'm going to continue with some new things I want to mention as predictions for 2023. And let's start about a little bit back, looking at 2022. 2022 did start in a bull market. It did continuously did increase in the price, but then we had a geopolitical event, a very big event, which I like to mention, and it is the start of the war between Russia and Ukraine. So the event is between two countries, but it did affect the whole world. There were sanctions placed on the on Russia because of this from the Western countries, from the United States and the European Union, and the sanctions, they did affect the commodity market, and it did increase the price of the oil for the global price of the oil. And it did trigger losses in the like decrease and losses in the stock market and decreases and losses in the crypto market. Uh, and like this global event was followed by the several big crashes, and I can mention the crash of Terra Luna, the crash of Celsius, and the most recent crash of FTX crypto exchange. These are very big and billion-dollar losses in crypto, and so like the crypto market was currently in a bear market. It keeps being down, and it like may have some small increases, but it keeps going down. Like for predictions in 2003, we are starting with a bear market, and one of the possible scenarios is like a continuation of the bear market. And this continuation can have two sub uh, two possible predictions of the bear market, two further predictions of the bear market. It's like continuation with a slow decline or a total crash in the crypto market. So with the continuation of the slow decline, continuation of the bear market, we can see like maybe like a small dose of optimism, small increase, which is followed with a big sale, and it leads to a little further decline in the crypto. It's like a triangular pattern, but it has a downturn in the triangular pattern. Um, so that's one possibility for the bear market, and the second possibility is the total crash, which can be triggered by people wanting to exit the crypto market and cash back in fiat. So why is this a possibility and why this can happen? So I did mention about this in my previous talks, and the topic of the specific talk was the danger in the stable coins. And why do I think there is a danger in the stable coins? Well, let's look closely at this. And so if we look at the market capitalization of the Bitcoin, for example, we have a little more than 20 million Bitcoins mined at the current point. And let's assume, like for easy calculation, that the price of a Bitcoin is 20,000 stablecoin dollars. So if we multiply 20,000 stable coins for one Bitcoin to 20 million Bitcoins currently mined, so we have 400 billion stablecoin dollars as a market capitalization of Bitcoin. And if we add all the other stable coins like Ethereum coins, and if we add also all the tokens on the Ethereum blockchains and all the other blockchains like Solana, Avalanche, Tron, Litecoin, Dogecoin, and all the other tokens and coins. So we may have currently maybe about 1 trillion stablecoin dollars. In the good time of the bull market of crypto, the market capitalization was maybe about 2.5 trillion stable coin dollars. So, so this I keep mentioning that the measure of market capitalization is in stable coin dollars. People assume that stable coins they um, like guarantee one-to-one peg to fiat or paper dollars or other the equivalent of other national currencies like euros, Japanese yens, UK pounds, and other national currencies. But this is not a guarantee. The peg is just a promise, and this promise can be broken. And why this promise can be broken is because of the number of actual paper dollars and euros and UK pounds and Japanese yens and all the other national currency. The total number of this currency collected is less than 100 billion dollars. And so like this number, $100 billion, includes not only paper dollars, but it includes paper UK pounds, Japanese yens, euros, and other national currencies. So people who assume the peg, the one-to-one peg between stablecoin dollars and paper dollars or other equivalent other national currencies, they have to keep in mind that there is very limited number of paper currencies which can meet the demand for people exiting the crypto market and wanting to cash back to crypto, cash back to fiat currency. So the current flow of people is the predominant flow is from people who want to enter, and the flow back from crypto to fiat is very small, very little. Currently, the stablecoin providers they can meet the little demand of people exiting and wanting to cash back. But if people want to cash back entirely from stable coins back to fiat currency, it can trigger depegging from like stable coins to fiat currency. Like the peg can like go down from 1-to-1 to less than 1-to-1, and this in turn can spread, like for example the runoff on Tether from people wanting to exit through Tether can also spread out to Circle, like people who like want to exit Tether, and Tether depegs like their USDT. People who hold the Tether, they can buy whatever, like if it starts depegging, they can buy back like other crypto like Bitcoin and Ethereum, and then they can go back sell this Bitcoin and Ethereum to get USDC, and they would be wanting to like exit through USDC, but like having a run on USDC would trigger depegging on USDC as well, and so this is going to trigger depegging of spread out from one to other stablecoin provider, and it can like in turn trigger the downfall of almost every cryptocurrency. So like that's a total crash of the crypto market scenario where the most of the tokens and coins go down close to zero, with the exception of like very major crypto coins like Bitcoin and Ethereum, which are going to lose maybe 90% of the value, but still hold some of the percentage of the value, because people believe they could recover. But the total crash of crypto may happen because of the like much smaller number of fiat currency collected by the stablecoin providers. And so like that's not a hypothetical scenario. It's a very real scenario which can be triggered by people willing to exit from crypto to fiat. So like so far I did talk about bear market scenarios with two sub scenarios of smaller decline, and in a smaller decline we can see uh, like crashes in other crypto coins and tokens, and the other sub scenarios of the bear market is a total crash triggered by the stablecoin providers and people wanted to exit. But let's talk about some positive scenarios returning to the bull market. And returning to the bull market can happen in the case of like central banks. Like some of the central banks, they did pose as a measure of limiting inflation. Central banks did start increasing the lending rate between themselves, like the central banks of countries and the ordinary banks in the countries. So this is a measure which can affect inflation, and it can limit inflation. Um, like some of the banks, like the European Central Banks and the Bank of UK and the banks of other countries, they started these measures, and the the measures are in place also in the US, done by the US Federal Reserve, which plays the role of US Central Bank. But some of the central banks, they did pose this measure, like what happened with the central bank in the UK, and they're posing this because it affects the bond market, and the bond market is very important and significant financial market, and so like it dictates the measures taken by the central bankers. So the central bankers, they can take for a while measures, but if there's negative negative effect in the bond market, they have to eventually pause what they're doing. And so far, the U.S. Central Bank, the U.S. Federal Reserve, it did keep continuously announcing measures for increasing of the prime rate, and For some extent, it limits the inflation, specifically in the US, and it has some effects to other countries in the world. Uh, but like the bond market in the US can dictate pausing in the increase, and then um, like with this type of announcement in the pausing, in the increase in the prime rate, or announcing of decrease of the current prime rate, like it can be a trigger event so that people return to putting money into the stock market and putting money into the crypto market. So this can like in turn like start increase in the pricing of the crypto assets like Bitcoin, Ethereum, other tokens and coins, and it can trigger the return to the bull market in crypto. Um, so that's like a positive scenario, but like a very big and very big positive scenarios, like it can happen with the events like quantity easing or repurchasing of assets, which like for example in the beginning of the pandemic in 2020, the US Federal Reserve, they did announce like financial help and quantity easing in the amount up to 4 trillion US dollars. And like the initial announcement of the beginning of the pandemic, it has a very negative effect with a big crash in the stock market and in the crypto market. But like shortly, a few weeks later, after the official announcement of the start of the global pandemic, um, like with the announcement of the US Federal Reserve, with this amount of money which were ready to be put into the like as a financial help, but this money actually ended in the hands of people which put them into the stock market and into the crypto market. So to a limited extent, it did help the population, but in a much larger extent, it ended this amount of money. It ended in the stock market, prompting the raise of the prices of the ordinary stocks like Apple, Tesla, Facebook, Google, SpaceX, and so on and so on. And it did trigger a continuous bull market for the like Bitcoin, Ethereum, and for example, Bitcoin did reach the price of 65,000 stablecoin dollars. So with the very optimistic, like the best case scenario for the crypto market is with the announcement of quantity easing or like repurchasing of assets, which can end up in the hands of people who put them in the stock market, and people put them into the crypto market. So like in the best case scenario, Bitcoin can continuous increase in price, and it can reach $65,000, and it can overpass this current high in the pricing. So it's possible to reach $100,000 or more. Um, so far I did describe the um, scenario for a bear market and scenario for a bull market with some sub scenarios of continuous decline or continuous increase. And I also described the worst, absolutely worst case scenario and absolutely best case scenarios for crypto. But let's go further than this. Let's look about some predictions on the technical front. And so if you look back in 2022, we had a very big announcement on the technical front, and it was the merge, so-called merge of Ethereum, and it was the switch from proof of works to proof of stake in the Ethereum blockchain. And so there was a white paper written by Vitalik Buterin and other contributions, and it was specifically for Ethereum 2.0. So it was a technical white paper and specification for implementation of next generation of Ethereum blockchain. And the white paper was very ambitious technically, so it did call for splitting of a blockchain into smaller pieces called shards, and handling transactions in these separate pieces of blockchain. So the white paper also called for having a very large number of nodes in the amount of 16,000 or 30,000 nodes, which they were, each of these nodes was supposed to hold a separate piece of the blockchain and separate shard of the blockchain. As a technical specification, as a vision, it looks nice, but it looks nice on paper, and all this vision and all this specification have to come to developers, and developers actually have to implement this specification in software, and in having a blockchain which operates according to what was the wish of the white paper. And so I'm a technology developer, and I could tell that some of the things required by the white paper for Ethereum 2.0 are good on paper, but very difficult to implement in development, and very difficult to make a real working blockchain which complies with this white paper. But let's look at the actual merge event, and the actual merge event, from all the things which the specification of Ethereum 2.0 was calling, it did implement only switching from proof of work to proof of stake. And so essentially with the proof of work, there were people mining, continuously mining the blockchain, and the specific way for the mining was achieved through graphical processing units, GPUs. These are hardware cards which are plugged into motherboards, and they do specific computation, and like there were people who had a large number of these graphics processing units, GPU cards, put into motherboards, and they had multiple motherboards and multiple GPU cards, and these GPU cards were doing non-stop calculations so that they could generate Ethereum coins. Like there was a continuous generation of Ethereum coins achieved through computations done in GPU cards. And this type of consensus mechanism, this type of generating coins, it requires significant amount of electricity. All these GPU cards and motherboards, they consume electricity, and there was a very large number of these miners, and which had motherboards and GPUs. So what the merge of Ethereum did is it did disable the nodes of like people who are doing mining, so that no longer people had to have motherboards with GPUs, but so like it switched to the proof of stake, which is actually based on generating Ethereum coins based on the stake which a specific node has in Ethereum coins. So this switch, while it did reduce the use of electricity significantly, basically it favors like people and groups which did collect significant amount of Ethereum coins. And which are these? Let's look at which are these people who did collect significant amounts. These are actually like one group of significant amount of coins are actually centralized exchanges, which they can notify the users, the individual holders of, for example, Ethereum coins, that there's a possibility for earning interest in their Ethereum coins, and then they can stake these Ethereum coins, and they can accumulate large number of coins in their staking pool. And so like the second type of group of people who are favored by the proof of stake are whales who did purchase a large number of Ethereum coins, and they can earn coins based on their large number of coins they did accumulate. So basically ordinary users who have like little amount of Ethereum collected, they could benefit very little from their collection of Ethereum, even if they stake this amount of Ethereum, but they could earn very little interest on this Ethereum. So this is because there is a very large number of coins, and the coins, they are accumulated by the centralized exchanges and like whales. So like let's look at the technical implementation of Ethereum back. And so like essentially the proof of stake, the merge of Ethereum, the merge event of Ethereum did from all the white paper specifications, it did only implement the proof of stake switching. So I was looking for articles which are talking about the other things, about the shards and the large number of nodes. And in addition to this, like the white paper mentioned, light nodes which are going to allow individual users to have their own access to blockchain, their own node of blockchain, and they could read and post transactions. So all these things don't I don't see any mention in the like articles telling about Ethereum, and so I think like money, like they're paid developers by Ethereum Foundation, which are supposed to do the implementation of Ethereum 2.0. But as a developer, I know that implementation is very difficult. And why is that? Why is that difficult? So let's look at the shards and the idea of shards, splitting of a blockchain in separate pieces. Like let's look at a shard, and like a shard, let's say there are people submitting transactions to this little piece of the blockchain, and then they're doing probably posting, which is a transfer or other address they're receiving something, like, or they like initiate a call to a smart contract. So this little shard, it has to be aware of the rest of the state of the blockchain. It has to continuously read the rest of the blockchain, and like all these transactions which are collected, then they have to agree with the rest of the other shards of the blockchain. So like the idea of splitting actually has to come to the terms of like this shard has to like continuously keep the rest of the blockchain, keep reading the rest of the blockchain, and keep being aware of the rest of the blockchain. So like these requirements makes makes the implementation under question, like because if the shard itself has awareness of the rest of the blockchain, it's no different than the current node of proof of stake of the blockchain. It plays the roles of actual ordinary node of the current proof of stake of blockchain. And so like the requirement of a large number of nodes, like 16,000 or 32,000 nodes. So let's look at the requirement of consensus. So the consensus is essentially agreement which has to be reached between nodes, and it's easy to reach a node in reach agreement or consensus in a single node, because there are no other nodes which this node has to agree with. So like it essentially what is submitted to a single node, actually the node is processing it. So if there are two nodes, the agreement has to be achieved between two nodes, and it's relatively easy. So with the small number of nodes, actually it's also easy to agree between these nodes. But if we're talking about 16,000 or 32,000 nodes, it becomes very difficult reaching agreement between all these nodes. So if people are posting transactions to this all this big number of nodes, reaching agreement between this large number of nodes becomes very, very difficult. Like reaching consensus takes time, and then even though there may be a large number of transactions posted, but then the reaching of agreement between this larger number of nodes is going to limit the number of transactions this implementation of Ethereum 2.0 can achieve. So, let's go further, like enough talking about technical implementations. Let's talk about government regulations. And but before talking about this, I could invite people to post questions in their like in their Instagram chat. Like I can read these questions and I can answer these questions. But let's look at a little bit back on the predictions about government regulations. And if we look back in 2022 and we look at specific event of the merge of Ethereum blockchain, which switched from proof of work to proof of stake consensus mechanism. Very shortly after announcement of the merge, which happened in September, maybe 24 hours after the announcement of this event, the chairman of the US government agency called Security Exchange Commission, which looks at the financial market and securities issued in the financial markets, like the stock market and partially into the crypto market. The chairman, Gary Gensler of the US Security Exchange Commission, did say that with the proof of switch of the proof of work to proof of stake, the Ethereum blockchain can qualify as security, and as a security it has to comply with the US security laws, and projects like the Ethereum blockchain and the token on the Ethereum blockchain and all the other Ethereum blockchains based on the Ethereum software, like Binance Smart Chain, Polygon, to some extent Tron, Avalanche, and Elrond, and all the other Ethereum virtual machine compatible blockchains, which have proof of stake consensus mechanism, based on the announcement of the chairman of the US Security Exchange Commission, they qualify as securities, and they have to comply with the US security laws. And following the example of the US financial market and US Security Exchange Commission, lots of other security regulators like security regulators in the European Union and other countries. They could follow the example of US and they could put the requirement into the uh, crypto market to comply with the security regulations in the specific countries. Um, so what could we have in 2023 is like we can have the initial shots of the Security Exchange Commission against the Ethereum and tokens based on the Ethereum blockchain. So this could be like a warning letters to comply with the US security laws and the specific projects and like tokens and coins, they have to start filing, either start filing or face the threat of lawsuit filed by the US Security Exchange Commission and Justice Department, US Justice Department against projects. Even though projects may not be physically located in the US, but like the US government has a very long reach and very long hand which can like reach to other countries in the world. We have the example of BitMEX, which was a big crypto exchange, and I think it was registered in the Cayman Islands by U.S. U.S. Citizen, and U.S. government did file a lawsuit against BitMEX. They file for extradition request to the founder of BitMEX, and eventually the founder of BitMEX he did surrender to the U.S. Marshals, and currently he is under under lawsuit for violating U.S. Security laws. So disregarding warning letters is actually very dangerous because of the very long reach of the U.S. government. So what could happen is there could be lawsuits and lots of projects, they have to think of compliance with US security laws and also compliance with security laws in other countries in the world. So I have been talking for the last hour and there's going to be recording for this event, but we're getting towards the end of 1 hour of my talk, and I'm going to wrap up the topic for today, which is predictions for crypto in 2023. For people who just joined, my name is Paul Arsov. I'm the founder of the Decentralized Web project. We're building a decentralized communication and advertising platform. We're doing non-blockchain type of decentralization. We have a software engine which does a decentralization. We still have a blockchain instance and we have a cryptocurrency token, but they play a support role in our project. So we're building a community and we're posting on social networks, which includes Instagram, Facebook, Twitter, Telegram, TikTok, LinkedIn, Pinterest, Reddit, and Discord. So if you're on one of these channels, come and join our channels, and specifically come and join our Telegram group. We are aiming to increase the growth and increase the participants in this users in our decentralized project. With this said, we are going to wrap up this event. As I mentioned, there is going to be a recording of this event, but thank you for coming and thank you for participating in this event. Once again, my name is Paul Arsoff. I'm the founder of the Decentralized Web project. Come to our website, which is decentralizedweb.org. It's decentralizedweb.org. And then on the bottom of every page, you can see our social network channels. You can click on one of the icons on the social networks, and then you can join a specific social network and specific channel that we post on. Thank you for participating. Have a nice day, have a nice evening, and goodbye.